Hello everyone, welcome to the Stock Martin channel. I have an awesome video for you today. We are going to be talking about the stock market, the economy. We have seen some very bad news yesterday about inflation. It is at its all-time high. We are going to be talking about how high is it? What does this mean for stocks? What does it mean for the economy and your future money? I think you're going to get a lot out of this video. Before we get down into it and get started, give me that big thumbs up to keep me alive on YouTube. Smash that subscribe button, hit the notification bell, hit all to get my latest videos. And don't forget to share this page as well. I do have that very free stock from Moomoo down below. You can get a free Lucid stock. You have to open a brand new account with at least $100 in that account. Will guarantee you that free Lucid stock, but I can also get you up to $17,500 in additional stocks. Stay till the end to find out how. Now, without further ado, I did want to talk to you about inflation and the economy. Just yesterday alone, the Bureau of Labor and Statistics has released the numbers of inflation. So they actually had the CPI score did come out, which is the Consumer Price Index, that showed and shocked actually economists in the United States because it is a lot worse than what they were suspecting. So inflation has risen to 7.5%, which is the highest that it's been in over 40 years. The last time we were this high was February of 1982. So this presidency, this economy is having to deal with a huge problem with the economy. How did we get here? First of all, let's talk about that. We have had so much money just being pushed into the system, the circulation system, that it has put so much pressure on the markets. A lot of people were getting extra money, just, companies were getting so much money, putting it into the stock market. This just skyrocketed the stock market, but we have had so much free money. We've had a lot of spending. This spending has actually caused a lot of shortages in supplies, in products. And if you're out in the store, you're looking at food prices. If you're looking at buying furniture, used cars, you name it, everything has gone up in price by so much. And according to the Consumer Price Index, things are 7.5% more expensive, which is a huge problem for the government, and they have to fix that. The only way to fix this is by increasing the interest rates, making it much harder for people, for companies to borrow money. So this is going to put huge downward pressure on companies that need to raise money to get started, new companies, small companies, companies that are struggling. So these companies are going to be having a very hard time. And also the consumers having a really hard time too, because our salaries have not increased, but inflation, the price of goods, has gone up 7.5%. Again, this has shocked the economists. They were predicting that it would be a lot lower inflation rate, but it is a lot higher than what's expected. Just to give you an idea, if you make combined family income, let's say of, just to make math easy, $100,000, you're actually not having that $100,000 paycheck or earning that much per year. It's actually much lower than that, by $7,500 lower than that. So for example, also if you were to go purchase a house or purchase something that cost $100,000, it's not $100,000 anymore. You have to pay $1,750, but I guarantee you're not getting a higher increase in your salaries. So this is going to be very bad for the market. We also have negative pressures coming ahead because you are going to start having student loan repayments restarting around May. So again, a lot of the student deferrals will be activated, that students will need to start repaying their student loans. Again, there's a lot of things that are going to be putting downward pressure on the stock market. But right now, inflation is at its all-time high. In order to fight this, the Fed is going to have to increase the interest rate. How are they going to do this? I do think that it's going to be a lot higher increase than what a lot of people are suspecting. Since we are at this 40-year high, inflation, I do think that the interest rates will be going up quite a bit higher. This will shock the stock market. I do think that there's going to be a lot of downward pressure. It's going to affect a lot of tech stocks, EV stocks that I do talk about. So you might see these prices of stocks go down. Now, this will be transitory. This will be short term. We could go into a short-term recession. We'll definitely have to wait. But right now, the government has a lot of things on its plate, and they're going to need to fix this. I think that, they could be fixing it over about 4 to 5 interest rates hikes that could be coming up as soon as March, which is next month. So the stock market is going to be quite volatile. So we'll do that due diligence to keep you updated on how this is going. Now, what stocks should you put your money in, or what stocks should weather this would be stocks in energy. Fuel costs are getting high. Oil prices are high. I believe the price of an oil barrel is the stock is about $92. It is increasing. So prices of fuel, of gas, petroleum is going up. That could be an investment to look into. Bank stocks will do good in a recession or with these huge inflation, interest rates going up to fight inflation. Banks also will be doing quite well. These are not well-liked stocks, or they're not big hype stocks, but they do have a tendency to do well in a time of high inflation or a recession. So it is nice to consider some of those, such as Goldman Sachs, Citi. Some of these banks will do good. Also, some of the energy stocks will do quite well. Now, I did also want to let you know, if you are a new trader or you are in investments in trading, it's actually a good idea to dollar cost average into it depends how much time you have, but you can actually put in to the S&P 500. It's the top 500 companies in the United States. Overall, these stocks have been doing quite well, but this has been hit. If you dollar cost average in, that's something that you don't really have to worry about. You can set it on automatic payments to get those lows, but this will grow and do quite well compared to the high-risk stocks such as EV stocks and tech stocks. So that is something to think about. I will be making a video this weekend to talk about some commodities, some gold potentials to hedge, as gold sometimes does tend to be a hedge against inflation and higher interest rates. I think you'll find that very interesting. It is a penny stock that I am looking at, but I will be presenting this weekend just to put on your watch list, as I do think it has a potential to do quite well with a lot of the volatility in the short term. But anyway, I hope you like this video. I hope you have a great weekend. It was nice talking to you. But before we get off to work, and give me that big thumbs up to keep me alive on YouTube. Don't forget to share this page with others, family, friends, coworkers, that next door neighbor. And also, most importantly, get that free stock of Lucid down below to Moomoo. Open an account. You have to put in at least $100 into a brand new trading account to get that Lucid stock. But in addition to this, Moomoo will also give you random stocks valued up to $3,500 for a total of 5, depending on how much money you have in that new account. My viewers so far have received Amazon stock, Tesla stock, Apple stock, Netflix was the last stock, and Lucid stock. So the list keeps growing, and definitely take advantage of these huge opportunities. Also, Webull down below, because Moomoo is available right now in the United States, but Webull is open across many other countries. Webull is giving my viewers up to 3 free stocks, $2,300 worth. Take advantage of those if you cannot use Moomoo, or use both Moomoo and Webull, as these are great opportunities to earn some money. But have a great weekend. Thanks for supporting the channel, and I can't wait to talk to you on the next one. Thank you.